And I thought this was an interesting post by Digital Asset Investor talking about what if Ripple's real secret weapon was hidden in plain sight for all these years and they were just actually a steward of most of the XRP in escrow, because there's about 55 billion XRP for supply here that is tucked away in their escrow, because as you can see, the max supply is 100 billion, the circulating is roughly 59. Well, the remainder is in escrow. And if you look right here on Ripple's website, they're saying that earlier they committed to placing 55 billion XRP in a cryptographically secured escrow account to create certainty of XRP supply at any given time. As promised, today we completed the lockup. By securing the lion's share of XRP in escrow, people can now mathematically verify the maximum supply that can enter the market. While Ripple has proved to be a responsible steward of XRP supply for almost 5 years and has clearly demonstrated a tremendous track record of investing in and supporting the XRP ecosystem, this lockup eliminates any concern that Ripple could flood the market, which we pointed out before as a scenario that would be bad for Ripple. Now, if you look at the word steward, it means a person employed to look after the passengers on a ship, aircraft, or train, or a person responsible for supplies of food to a college club or other institution, or a verb might be manage or look after another's property. So if Ripple is using the word steward, who are they stewarding the XRP supply for? Could it be the federal government? Could it be the IMF? Could it be SWIFT? Well, the important thing to understand here is this. Ripple, the company, did not create XRP. XRP was gifted to Ripple as a trusted stewardship of XRP in their escrow account. So the real question remains, is escrow from whom or escrow for what? So I thought this is a great reply here. Imagine Ripple has a giant treasure chest full of this XRP money. This chest is locked with a timer and only a little bit can be taken out each month. For years, everyone thought Ripple owned all the money in the chest and that the executives were just dumping XRP on the open market, and that's how the only way that they were making their money. But what if there was a much bigger secret under the treasure chest that nobody was paying attention to? What if Ripple was just babysitting the treasure chest for someone else? So imagine they were never the real owners. They were just guarding it for millions of other people around the world, or for an institution that is more powerful than any crypto company. And they were waiting for the right time to make a strategic announcement. And what if their big argument with the government, the SEC, like getting called to the principal's office, saying that XRP is a security, was the very last thing that had to happen in the lawsuit ending before they could finally tell everyone the secret that they've been holding on to that would completely shake up the entire crypto industry? Well, isn't it interesting now how the SEC with their new chair is encouraging everyone to self-custody their crypto? Watch this.
The right to have self-custody of one's private property is a core American value. I believe deeply in the right to use a self-custodial digital wallet to maintain personal crypto assets and participate in on-chain activities like staking.
So this creates a massive mystery around the XRP escrow, because most people think they know what Ripple's escrow is and few understand what it actually is. So in this section of the video, we're going to break down what it is, why it exists, how it works, and why it's one of the most misunderstood parts of XRP's story. I thought this is a great post by Ripple City here on Twitter. Well, the first thing that you need to understand is the backstory. Going back to 2017, Ripple held more than 60% of all XRP. So the fear, uncertainty, and doubt was they'll dump it on the market. So in December of 2017, Ripple did something no other top project had done. They locked 55 billion XRP into a public cryptographically enforced escrow on the XRP ledger. And how it worked was simple. The escrow unlocks a predetermined XRP on the first of every month. Whatever Ripple doesn't use, whatever they don't sell, goes back into the new escrow, dated further out. So it's code enforced. Not even Brad Garlinghouse can touch it early. They can't just dump it all. It's impossible. So how it works from a more technical version is the XRP ledger has native escrow transactions. So there's escrow create, which locks the XRP with a time condition. There's escrow finish, which only after the date passes can it be released. And then there's escrow cancel. If conditions aren't met, it expires. So no private keys, no access, no shortcuts. And the purpose of this was a predictable supply. Markets know the maximum XRP that can enter each month. And this is pretty standard for a token project to have as a part of their tokenomics. Most of them call it token unlocks. If you go on CoinMarketCap, you can see this tab at the top right here. Like for SUI, for example, you can see that there's 10 billion in max supply and 3.5 billion in circulation, which means roughly 35% is unlocked and 64.8% is still locked up. And then it shows right here the unlock schedule over a period of time to give you an understanding of the dilution that would hit the market, so you can run your market cap calculations for those of you guys that like to do that to understand what the market cap would need to be to reach a certain price for you analytical minds out there. So this is important for XRP holders because this builds trust and it proves that Ripple won't just flood the supply, completely diluting XRP, because if they release the remaining half into circulation, well then theoretically that would cut the price of XRP in half based on the current market cap, because now all 100 billion would be in circulation. So this is liquidity planning. Ripple can support on-demand liquidity corridors and partners without shocking the market. So how does Ripple use the released XRP from Escrow? They don't just market sell all of it. Yes, they have sold some of it where the remaining gets locked up, but this funds their on-demand liquidity usage, and it creates strategic partnerships and acquisitions. Also ecosystem development and incentives, and the vast majority that they don't use for all this is relocked into Escrow. So the reality in numbers here is at the start, there were 55 billion XRP locked. Today, well, at the time of making this post, there was roughly 35.9 billion XRP still in Escrow. That's after 7 years of monthly unlocks and relocks. And if you see right here on the 1st of August, XRP was at $2.89. That same day, XRP pumped over 5%, even with the unlock. Now, of course, XRP was sold off from that with the rest of the market. So this was following Bitcoin and everything else until the 3rd of August, dropping about 10%. But if we look right here, you can see that Ethereum sold off as well too, from $3,800 down to $3,300. So the whole industry took a hit. It wasn't necessarily, and actually, in fact, it wasn't XRP selling from the Escrow that caused this dip, where on the 1st, XRP pumped. So a lot of people are placing too much emphasis on Ripple releasing XRP from Escrow on the 1st of the month and selling it, and that's causing price suppression for XRP, when in reality, that's not the truth at all. We need to look at much more macro conditions. For example, on this post right here from TechDev, the 4-year altcoin dominance has started to break out for Total 2 compared to Bitcoin. And as you can see right here, Total 2 compared to Bitcoin has been in a massive downtrend ever since September of 2022. You can just see we've been making lower highs and ultimately lower lows in this bearish channel right here. And we're just starting to break out. Now, the real question people have is this the false breakout? Because as you can see right here, Total 2 broke out from this descending resistance and then was sold off right back down into it and continued to the downside. So we're going through a major breakout right now. Now, we need to hold, even if we pull back, we need to hold on top of this descending resistance as support right here and not get sold right off back down into it. So I would want to see us hold a range if we see some type of consolidation, or I just want to see this rip continuously to the upside relative to Bitcoin. Similar to what happened all the way back here during that 2021 bull run. When we broke this downtrend here, you can see we had an aggressive move to the upside. When altcoins started to break out from, January of 2021, we rallied all the way up to this descending resistance, and we just saw massive volatility until really April. So from January, February, March, April, for 4 months, we went sideways. Once we broke to the upside, it was a little volatile, but we just marched high and we just started breaking out rapidly. And if you guys recall, at this moment right here, by March and April, at the end of March, beginning of April of 2021, you can see that was right here when the altcoin market went from about $590 billion all the way up to about $1.5 trillion during this move. But it didn't mean that altcoins weren't rallying before then, because during this whole entire consolidation phase right here, look at what was happening with altcoins. They broke out past the all-time high during this entire phase right here, and they were still doing exceptionally well. It's just that they were going back and forth with Bitcoin. So while altcoins were breaking out during this phase right here, Bitcoin was breaking out as well too. So we didn't really see alt season until March and April of 2021. Once that hit, well, let's look at where Bitcoin's dominance was at that point. We were right here at this critical point for Bitcoin's dominance when this breakout started for alt season. That's when Bitcoin's dominance after that started to break to the downside below this critical horizontal support right here at like 60%. And sure enough, right now, if I just scroll all the way to the right, what is happening for Bitcoin's dominance? Well, if you look right here, we're doing the exact same thing. We just started the breakdown from the critical 60% support. And with this red candle right here, and if we look at Total 2 now, and we just trace up the bar pattern here and we bring it to where we're at today, are we going through a similar move right now for altcoins to start breaking out like what happened in 2021? Or will this take a little bit longer? We shall see, but nonetheless, what happened when Bitcoin started to break to the downside is dominance just catapulted to the depths of the Marianas Trench there, and altcoins went absolutely parabolic. So if this were to happen and we see Total 2 relative to Bitcoin start to break out massively, we will see altcoins absolutely explode. So instead of trying to guess which news event is the crypto top from a fundamental standpoint? What if you actually just watch the cycle, you looked at the charts and ignore the comments of people saying that charts don't matter? Because yes, charts definitely matter. Charts follow patterns over and over and over again. Because right now we're seeing all this news drop with Donald Trump doing the unthinkable, signing these executive orders, going full bull on crypto. His family's accumulating so much Ethereum. We have his sons bull posting Bitcoin and Ethereum, telling you to buy the dip, all at the same time, while these key indicators are showing that we are about to go through a massive breakout for altcoins. So just like I mentioned in my video 1 to 2 days ago with Bitcoin's dominance breaking down, we're seeing that happen as Ethereum now breaks upwards of $4,200. And so this is the path to alt season, right? Phase one, Bitcoin. Bitcoin has just been dominating the market since the bear market bottom, basically. We haven't seen a phase overlap for Ethereum to break out. So now that Ethereum is starting to basically break to the upside and outperform Bitcoin's dominance, the talks of the flippening phase, well, that was for 2021. I don't necessarily think we're going to hear much of that this cycle. Maybe we will. Maybe people are going to talk about Ethereum flipping Bitcoin in market cap. I just don't see that being a reality for this bull run cycle as much as there would be a talk of XRP flipping Ethereum. I think that's the narrative for this cycle because of everything that's happened with the lawsuit. What's coming by November at the end of this year for the ISO 222 standard globally. And XRP right here is sitting at just shy of 200 billion. Ethereum's only at 500 billion. So a little over a 2x from here, and it'd match Ethereum's market cap. That can happen relatively quick with how fast liquidity flows into these markets. So ultimately, phase 2 to phase 3 is large caps start to run. And so while Ethereum breaks out, we're seeing large caps break out, but we haven't seen that full vertical phase until we get to phase 4 of alt season, where everything is blowing off top. And then people realize the risk to reward ratio on something like Ethereum. When Ethereum is all the way upwards of like $6,000, $7,000, $8,000, $9,000, $10,000, if Ethereum makes it to 10K this cycle, do you guys really think smart investors are going to come into the space that have been watching crypto ever since 2022 when Ethereum was all the way down here at $1,000? Do you really think those people are going to be buying Ethereum upwards of $10,000? Only the stupid ones will. No, the smart ones will be offloading their Ethereum for the next major pullback if we top out that high from $10,000 to $15,000. That's where they're going to be offloading. Where are they going to be rotating that income? Well, they're going to be rotating that income into either stable coins, just parking their cash on the sidelines, or they're going to be looking for mid-cap to micro-cap projects. So the best play that you can possibly do on the way up that the billionaires are doing is actually borrow against the assets that you already hold without needing to sell.
Have you built a crypto portfolio over $1 million but want to access your wealth without selling any of your coins? Well, imagine unlocking up to 85% of your portfolio's value to fund ventures like real estate, to buy other projects in the crypto space that are undervalued compared to the projects that you currently hold, or to diversify into different DeFi yield opportunities. That way you can live on the interest without selling any of your crypto. Well, we've partnered with a leading global office offering non-recourse crypto loans for investors with portfolios starting at $1 million. The same company that is trusted by the world's largest institutions and investors because, as you already know, the billionaires don't sell their crypto, they borrow against it. So if you're ready to unlock up to 85% of your portfolio's value without selling any of your coins and you have a portfolio with at least $1 million, then email us at team@bullrunners.com. You're going to see our email contact in the description below, and we'll get you connected with the company that has helped clients like ours north of $100 million borrow against their crypto without selling any of it. So reach out to start a conversation with our team right now at team@bullrunners.com, and we'll talk to you soon.